Good morning, everyone. Before the video plays, good morning, everyone. Before the video plays, I just kind of wanted to give a small explanation as to why there are black bars on the video. I just had messed with the scaling option and I forgot to change it back. So unfortunately, most of the recording had to be scrapped. The whole time I was in the trade, I have to get rid of that, and I will only be keeping the part where I did a one-on-one, basically mentoring with my buddy. So, I go through a lot of things, a lot of early concepts that are good to know to understand my model, and then once he understood it a little bit better, knew what to look for at least, um, or understood when I was telling him what to look for, what it was. I was able to show him my model pretty easily, and then I got into this trade. Initially wanted to buy here and it went up without me, so I took it as a chance to talk about psychological issues that will arise into trading, because this was his first session with me. Like, doesn't really know much about trading yet, but then it eventually came back. This was later when I was on my own. I got an alert, price came back, and then I re-entered just on that change in state of delivery, and price slowly delivered to the buy side liquidity to the high of the day there. So that was the trade, and again I apologize for the quality of the video. Would have wanted to post the whole thing, but sometimes it just is what it is. So the times I trade 3 a.m. to 5 a.m., 7 to 9, 9:30 to 12, and then 1 to like the afternoon.
Okay.
So that's like the main times to trade, but it changes for everything. So if you want to trade gold, for example, you might have better luck trading in the evening, like around 7 or 8, because that's when the Asian markets are open and Asians are buying a lot of gold. So it changes. But there's two things I really do before getting into a trade. These two are the most important ones. You won't get what any of this means, but I'll do it with you as we go through it. But the first question I ask myself is, when I look at a chart, is where's price gravitating to? So if I look at some of these here, over here, right? Basically, what is? Wait, hold on. I'll just remove. So there's no arrows on the screen. So basically, all price is doing all the time is going to highs and lows. So whenever you see the dashed lines, those represent each a day's price action from like Thursday. No, this is Friday. This is Thursday. This one's Monday, and now we're on Tuesday. So you see, if you go on an hourly chart, mark out the highs and lows of each day. So this is a day's high. You mark it out in time. This is a day's low, and you just go back in time and just keep doing that. Mark out the day's high and low, and then just see what happens every time we trade through them. There. I'll do like maybe 2 weeks worth of data, and then you can kind of get the idea. So yeah, but what price is really, all it's really doing is it's every time it's trading, it's going somewhere. It has a destination, and that's the highs and the lows. So that's the first thing to understand about price, is it's high and a low. So what you're looking at here are candlesticks.
Okay.
And each candlestick has a body. So let's just say I have two colors. I have green and black, and then it has what's called a wick. So the line in the middle is called the wick.
Wick?
Yeah. Yeah, so you have your typical candle. That's the body, the candle, the body. And then you have the wick, which is like the high and low. So whenever a candle opens, it'll open up. Let me move this here. So it'll open up here. Let's say the time is 7 a.m. like it says down there. So we call this one a 7 a.m. candle. it's gonna open up and it's gonna either go up or it's gonna go down.
Okay.
Right, so we see if it goes down, it's gonna be black, and if it trades back up and it goes up, it's gonna be green. And then if let's say it goes up and it comes back down, that's when it leaves the wick. So it's gonna leave the wick to wherever it went. So if it were to like go down over here to this level and then it were to come back, it would look black, and then it would come back up and it would leave a long wick like this. That's the low.
Okay, so I have a quick question. So every time it goes down, every time it goes down, it's black, and then when it goes up, it's green, right?
Yeah, and it's important to understand the levels behind that. So it's open to understand the open of the candle, the close of the candle, the high and the low, because that's really what you use to determine, where, in which direction you're gonna take a trade in. Because see what happened when we took out last week's high. This is more important than day's high, but it's the whole week's high. Is you see we came right back down.
Oh, you see, from here to here is 1 week, right? Or 1 week is all the way.
This is Thursday and this is Friday. Thursday, Wednesday, Tuesday, Monday.
Okay.
So whenever each of these levels, like what I do is whenever I'm looking at price and I see one of these levels get taken out, I get an idea, right? So I'm like, oh, so let's say up here, right? When or let's look at a different example. Right here at 10 o'clock on a Monday, when we came and we took out buy side liquidity, which is what I have marked as the previous day high. I started looking to sell. I started looking to get into something I can make money if it goes down. So in trading you can't just make money when it goes up. If it goes down, you can also make money. It's called getting into a short. The other way is getting into a long. That's when you buy and you make money when it goes up.
Okay.
So short and long. So whenever I'm waiting and I see price get and hit this level, then I start to look to short. So what I would do then is I go straight. This is basically the second step. No, the first step and second step. Then when I go to short and sell price, see up here there's different time frames. You go from the monthly, weekly, daily, 4 hour, 1 hour, 30 minute, 15 minute, 5 minute, 4, 3, 2, 1.
Okay.
Right, so you don't have to use all of them. I mostly just use the 1 hour, 15 minute, and the 1 minute, and the 3 minute. So yeah, you go 1 minute chart. I'll go back to where price took out the highs. So boom, there you go. It takes out the buy side liquidity. I call this my draw on liquidity or point of interest. It's basically the area where you start to look for a trade once it hits. So it hits it here, and then I start to look for a trade. There's then a few things I need in order to trade. So when you go down on that 1 minute chart, whatever candle made the high that hit my level that I'm looking at, so this is my level of interest, whatever candle hit that level, I keep an eye on it. So 1032, and then basically from that point I'm looking for the highest high, and I'm retracing its steps all the way back to the last green candle. See what I'm doing? So if we had continued to go up, then I would have just used a higher value, but I would have looked for the sort of like a clean run that takes out this buy side liquidity on a smaller time frame.
Okay.
So this is like if you zoom in, right, and you're just looking for that clean run. So these are all up close candles. Like I'm not using this because there's some down close candles in there. So I'm gonna use a very that 1, 2, 3 up close candles. Another example is down here. You see how that down close candle is clean. That's something I want to pay attention to, and when I see that reversal at 9:30, I think about where it went to, and I see there's this low, which is pretty spaced out. There's that one. These are all pretty all together, so they're, and then there's this one down here that kind of touched. These are all pretty much together, so it came down here to sweep all these lows. and then you want to look for that clean run that actually did it, that made the lowest low. So if we did it here, then I would look at this range from these two black candles. But then because we made a new low, a lower low, this is what I call the protected low, the safest low. Then I look at the other range. So the reason I do this is because when I'm about to get into a trade, I before I even press anything, any buttons, I get into anything, I need price to come all the way down and close beneath the opening of that first candle.
Okay.
So I wait for that, and it did it right here. So right at 10:45, it closed here. And what I call this is I call it change in the state of delivery. CISD. CISD. Oh my god. CISD. There you go. So I call that the change in state of delivery. Is basically me saying that we've kind of changed the trend. We were going up, and we went up again. It's important. We went up to a certain area, a special point of interest. So you need to have a reason why you're gonna start to look to sell, and that's the reason is that buy side liquidity. That's my area of interest. So once it hits it, I first need to see the 1 minute chart close beneath whatever clean run made that point of interest triggered, and then I need to wait till we close. So we do it at that candle right here. Then there's two more things that I need, and these are called, so there's something called a gap. A gap is basically, you can see it here at 10:09. A gap is a 3 candle formation where you take the high of the candle to its left and the low of the candle to its right, and then that space in between, that's what we call a gap. Price usually wants to come back to these and fill it.
No, the one I didn't get it. To be honest, the one you see where they got.
So
you explain it one more time?
Yeah, so a gap is a 3 candle formation. So it takes 3 candles, and is basically, if this is one candle, this is another candle, and then this is another candle. There's gonna be a space, right, in between the with this candle, with that candle's low and that candle's high. There's gonna be a space.
Okay.
That's what the gap is.
Okay.
So you see that space there?
Okay.
So can you spot another gap? Is there another one you can see on this chart?
No, I don't see any more.
So there's only one gap?
Yeah.
This one?
Yeah, only that one. Yeah.
What about this one?
No, I don't think that one.
It's not a gap?
No.
No, it is a gap. 3 candle formation. That candle's high and that candle's low, and then the space in between. That blue area, that's the space in between. So the wicks here covered this candle, covered that candle, but they didn't go all the way. So here for example, there's no gap because there's no gap here because you see how the wicks overlap.
I'm getting too much information at once.
You see how the wicks overlapped here?
Yeah.
They came in and then they painted both sides of the candle, but there's other spots where it left it open.
Okay.
You understand that now?
Yeah. Let me take a picture of that.
So if you had your candles, like this, right? Oh my god. Okay, if you had your candles like this, right?
Mm-hmm.
each candle has a wick. You remember that?
Yeah.
So if my wicks were to do something like this, where it completely has overlapped with that candle, then there's no gap. But if, let's say, my wick doesn't and it only goes to here, then there's a gap, because, oh my god, there's a space. See that space between that low and that high on this candle?
Yeah.
That's what the gap is. So those are things you just want to pay attention to. You just want to be able to spot them. You don't need to be able to anticipate when they form which ones are important. You just need to be able to spot them. So can you spot any more over here? There's plenty everywhere.
What about those two? No, I think those two. Yeah. No.
You mean which three candles form a gap in this? There's many of them. I'll give you one. This one. This is one, because you see that candle and that candle, and there's a space in between them.
Okay.
That high, and then that. Sorry, that low. That's one. Is there 3 more candles you can find that create a gap?
Those
Yeah.
3.
Yeah, you're right. And then there, you can even have the same thing here with the down close candles.
Yeah.
Yeah. So there's 2 types of gaps. There's so in trading terms, when you say something is bullish, think of a bull where with horns, it's attacking you with putting its head up, which means when people say we're bullish or we're a bull, that means they think price is gonna go up. So I call this I would call the green gaps bullish fair value gaps,
Okay.
or positive fair value gaps, or whatever, right? But the down ones, the black ones, I will call them bearish fair value gaps. The reason I say bears, because the bears, they attack you but with their claws going down. So it's like, investors, when they say they're bearish, that means they think price is going to go down. So you can also say like black fair value gap or negative fair value gap. And I color code them. So the ones that go up, I make them in blue, and the ones that go down, I make them in pink. So I color code my gaps.
Okay.
So the blue ones are going up, and the pink ones are going down. Okay. Now the thing with fair value gaps is, are you familiar with what support and resistance is? Like the idea?
It's not the one that we're making. It's not the lines, those lines that you are making from the top and then from the bottom.
No, that's not. No. So it's similar, yeah, but it's not what I was explaining.
Okay.
No. So support and resistance is, let's just say price turned around here. Instead of wanting to go to that low, instead of trading to that low,
Okay.
what I'm thinking is price is gonna reverse when it hits that low.
Okay.
So it's gonna do something like this. Comes down and it bounces up.
Okay.
You see that? So that's not the same thing. I wanted to go beneath it, because I think that when it hits the low, when it gets closer to this area, people are gonna. The idea is that there's investors that are buying at this level. And they're not buying at a specific level. They're buying in an area. So there's investors buying in this area. So whenever price comes down near lows, oftentimes people buy. It's cheap to them, and they buy it, and they think that it's gonna hold this level, because things look good or whatever news it is. But in reality, it doesn't matter. It goes down enough for them to think that now we're gonna do something like this. We're gonna retest it and go down. That whoever was buying at this level, they aren't there anymore, and now it's just gonna go down. Alright, so then what happens is people sell, and what that does is it creates more people that get into the markets, more people that buy, because more people that also sell, and that makes the markets efficient, and it makes more money for investors, because billionaires especially, because they get a better price. if you're buying something and you get in at a different price
Mm-hmm.
because there isn't simply somebody willing to buy it at the price you want, it might not be that big of a deal. You might lose maybe $20. Even if you have a lot of money, you might lose maybe $5,000. But think about billionaires. They're gonna lose millions if they get a wrong price. Sometimes it can be tens of million. There's such big trades that like the what I believe is that there's a program that runs price and delivers price, and it does it so that investors can basically get in and out at safe prices. People in general can get in and out at safe prices, and everyone can make more money. But learning how to read that is important, which is why I tell you to look at the lows, because that's really what it's going to. I'm not just looking at this low and being like, oh, yeah, I can buy it. Let's just say I do buy that low. I'm also thinking about where is price going to go next, and it's these highs. It's going to go up to the highs, and I'm holding it for it to get to the highs. So I can also, if it's here and I expect it to go down, I can even try and sell price to get down there. Like there's so many things you can do, but that's basically what I'm telling you. That's how price, what it looks at, and that's why it's the most important thing when I trade. So anyways, going back to the gaps, before I take a trade, before I sell, I need to have the two gaps, both types. I need to have a gap that goes up and a gap that goes down.
Okay.
So as soon as I see all three of those things, I change the state of delivery. I see a bullish gap and I see a bearish gap. Then I can sell price, and then I just get in. I just get in. So and then my stop loss is usually always at that high, at the most protected high, like the safest high. Well, actually, yeah. And then I go for two times what I'm risking. Now, I wouldn't take this trade, because it was like just this was not a good trade. This is, this is in the after, 11. It's just not worth it for me, at least, because the stop loss is so huge. Like usually my stop losses are about 25, 30 points. But you could still take the trade. I don't think it wins here. I don't remember, to be honest. I just don't remember. I remember it takes a very long time. So let me actually just go forward all the way. This is the trade I took here. I took it Friday. Let me skip forward. Okay, wait. So see what I mean? This trade, this would have been a very long trade, and it would have been a bad trade to take, because already this moved by so much, and then you're asking price to redo the whole thing on a Friday with it's just not. I mean, you can still take it, but it ends up not working. Like by the end of the day, it still doesn't end up either going to profit or loss. But the trade I took on that day was, let me log in. Actually, I'm not gonna log out of this one. I did the same thing as back here, right, except now we're at a different time. We're in the afternoon. And then I already had this level hit. So once that's it, I can start looking to get into a trade. I start trading in the afternoon at 1. There you go. So because this was hit a while ago, on the higher time frame, it was still hit recently. So we still have time to hit this level, the buy side liquidity, the previous day high, and then we still have time to reverse. We don't always need to immediately go back down. We can go back down, stay up here a little bit, and then continue going down. Or we can just slow down too. But because we had been going up all day, in the afternoon, I wasn't really looking to continue going higher since we had hit this level. If we hadn't hit this level, if the high of the day was, let's say, higher and it was up here, then I would still be looking to go up. I would be trying to see if there's any reason to buy because we hadn't hit the level I'm looking for, right? So, but because we hit that level, now I'm only really interested in selling. But because this happened so long ago, I need a reason to like reset. So I kind of need to like reset. And what I do is I go on the 5 minute chart, and I basically look for price to do this. So if I think price is gonna go down, I basically wait for price to do the opposite. So I wait for it to go up, and it starts to trend higher, and then that's when I try and get it to go down. So at 1 p.m., I'm looking at the highs, and I'm waiting for the first 5 minute high to get taken out. So there's one that happens here, because we come up at 150, we take out the high, and then there's another one that happens here. That's it. So I go in, I look to sell on the 1 minute chart. There was nothing here, because see the range they made the highest high is this, and there's no fair value gap or inverse fair value gap. There's no two types of gaps here.
No gaps,
Yeah, so I don't sell it, and it would have been right to do so because it's not moving very quickly. It's very very slow right now. But as the last hour comes, it gets faster and it starts to move. But before that, there's another opportunity. It breaks the trend again and it makes a new high on the 5 minute. And then it goes down. Okay? And then I get in, you see there's both gaps. We make that gap there and that gap there. And then, or instead of using that gap, I can also just use this one, and then that one. That's better. Or even that one.
Dang, too much information.
Yeah. See, this clean run up, we close beneath it. I sell right here. There's a bullish fair value gap and a bearish fair value gap, and it wins. One thing I'm gonna tell you though is what I'm teaching you here.
Yeah.
It might work for you. You know, like you might not like it eventually, and that's okay. But there's the more you kind of learn how to read price, the more you'll be able to like form your own rules. Like you'll be able to like look at what I know and like learn what I know, and then be like, okay, well, I like the gaps, so I'm going to use.
I have a quick question. So here, here there's the gaps. No.
Yeah.
And then also there's a gaps on the black one, right?
Right here.
On the black one, so no.
Right here, pink one. Right.
Oh yeah, there's a gap on those black ones now. Okay.
Yeah. So. Yeah. So you see the support and resistance ideas you were thinking about earlier.
Yeah.
Where you think if you have a level here, a high and a low, and then price will like bounce around. Price will like bounce around these areas. Like sort of like this. Yeah, so that's a resistance line, that's a support, and then resistance can turn into support like it did here, and then support can turn back into resistance like here. Yeah, so the thing is, I don't look at highs and lows like that. I don't think that's what supports and resists price, but I do look at gaps this way. So you see that gap here, it acts, this one here, it acts as support over here, then it gets turned into resistance here. So I do look at the gaps to be support and resistance.
Okay.
So when price went up here, I see it go into that gap. When price went up over here, I see it go into that gap. But yeah, back to what I was saying though, about how you trade. The most important thing I think all traders need to understand is liquidity, and so where price is going. That's all of these lows, the highs and lows. That's all you need to understand. If you understand that, then you know you could flip a coin if you want to get into a trade. There's so many things you could do to get into a trade. It doesn't matter what you use. It doesn't have to be what I just showed you. It can be your own thing. You could. What I first did is I waited. I traded at 9:30 every day, and as soon as I saw a 5 minute short term, either it was a high or a low. It didn't. Nothing else mattered, whether it was a short term high or a low. I waited for that to be taken out, and then I dropped down to a super small time frame in the seconds chart and looked for a gap. But yeah, now there's one more thing I'm going to teach you before we go back to what's happening right now with the price, and it's short term highs and lows. I made a presentation a while back. That was pretty neat, but let me see if I can find it.
Oh, you even post videos. That's super nice. So I can just go back to your videos.
Yeah, I can send you this one. Yeah. This is a good video. I made it for my little brother because he wanted to learn, but then he stopped. So I understand everything I just told you. I explain it here very clearly in the note format. You can go and look, but price consistently just goes up and down really. Okay, so this is what I wanted to teach you: highs and lows. So yeah, I already told you about the open, high, low, and close. Then there's swing lows and swing highs. So these are also 3 candle formation where you take one candle, a second candle, a third candle, and then the low forms in the middle candle, where the candle to its left is higher, the candle to its right is higher. The low, this is the lowest low of the three. Same thing with the high. It's the highest high of the 3 candles is high. That's a swing high and a swing low.
Okay.
And then there's a little more complicated, but it's the same thing. So these are long-term highs, or also some people call them old highs. Okay, long-term highs are swing highs. So this is like instead of a 3 candle formation, you're using a 3 swing high formation. So you're using a lower swing high to its left, the middle swing high, and then the lower swing high to its right.
Okay.
It's the same thing as that, except the candles aren't directly next to each other. So if you were to look for a long-term high on this chart, you could use this one, right?
Yeah.
But meanwhile, this one would just be a swing high. It wouldn't be a long-term high. Why wouldn't it be a long-term high? Because there is no swing high that's lower to its right. The swing high to its right is higher than it, so it becomes part of a trend, and it doesn't become an isolated high, so a long-term high. Basically going forward, this will be relevant. This one won't be irrelevant though, because it's the highest high. We're gonna meet it again. This is a long-term low, but this one here, this is a regular swing low, not a long-term low. So all long-term lows are swing lows, but not all swing lows are long-term lows. There's another type of low called short-term low, which is basically any low that's not a long-term low. So short-term swing point is basically a swing point that isn't a long-term swing point.
So you say this one is a short long-term run, right? On the black one.
Yeah. That's a long-term low.
That's a long-term low.
So,
okay.
Well, we'll do this. I'll draw a little trend exercise. I want you to alright, tell me which ones are long-term highs and which ones are long-term lows, and which ones are short-term highs and lows.
I would say this one is long is short-term lows.
I see. So let's start with the lows. You have short-term low or long-term low. Let's start with this. Why isn't it? So start with this one over this one right here, the first low. What is this?
Uh, that one I would say is a short-term low.
Yeah, short term low. It's good. So we'll put an S. S. Okay. Next one, this one here.
Yeah, that one too. Short-term low.
This one
This one too.
and this one.
Yeah.
Short term low.
That one it looks kind of, it might go down, so I'll say maybe long-term low.
And this one.
Yeah. Short-term low.
This one.
Short-term low.
Okay, and then last one.
I'll just call it short-term low.
Short term low.
Yeah.
Nice. Yeah, you're right. These are all short term lows, but then this one has a higher short term low, a higher low to its left and a higher low to its right. So it becomes a long term low.
Yeah, very
And
right.
the highs is the same thing, the short term, long term, short term. This is which one?
Oh, sure.
Is it short term or long term?
That one is I would say is a short-term high.
It looks like a short term high, right? Because it's in a trend higher.
Yeah.
But it's not. There's a lower high to its left and a lower high to its right. So it's the highest high between the three.
Highest high.
So it becomes a long term high,
Long-term high. Okay.
right? Do you understand why?
I would say because we have a short term on the left, and then we also have a short term on the right. So yeah.
Yeah, you didn't spot that. It was a little tricky, like a trick question, but yeah, it looks it's disguised as a short term low because it would be easy for it to just be a little bit lower, and then boom, there you go. Now you have short term low, short term low, short term low, short term high. Sorry, but because it's above this point and that point, it's a long term high.
Long-term. Okay.
Yeah, and then that one's which one?
Mm, I'll say long-term. Long term.
Long term, yeah, good. The short term, yeah. So you pretty much got it. So that's important. Do you understand, like, you know, the differences between that? Because when I talk about short term lows and highs and stuff,
Yeah.
you'll understand.
Yeah.
The reason why long term highs are more important than short term highs is because you can see them on more time frames. So take this high for example. If I go up to a daily chart, this is the high of the day, so I'm gonna be able to see this level on my daily chart. I'll also be able to see it on any other hourly chart up to the daily charts. 2 hour, 3 hour, 4 hour, 5 hour. So a lot more people are gonna be looking at that level and doing support ideas like support and resistance. Like there's gonna be a lot more participants willing to go into the market and buy or sell price when it reaches these levels because there's more people that are using them on a different time frame. It's more populated than it would be for this low. So this level isn't as important in the future as the level up here. So that's called the fractal nature of price. So you can layer it from time frame to time frame. Now starting from this chart right now, like this is gonna be this is the live price action. What's happening right now? What does it look like? Price is reaching for.
Boy, it's kind of hard to tell.
It's okay. The first thing I do is mark out your swing, your long term highs and lows. So let's try and find first let's mark out the daily highs and lows. That's
Okay.
the daily
Yes.
highs and lows are they're always gonna be on the hourly chart, long term lows. So this is a day's low. Okay, and then we have its high over here. Have the high there.
Low.
We have that low here. Same thing, we have the high here. And then we have the low here.
How about this one? How about this one? No?
I mean,
Okay. We can have the lows here. On that one. No?
that?
Yeah.
Well, no, because it's not even a swing point. It's a low, but it's not a swing point. Remember the swing point? So we want to pay attention to, because the swing points are visible on more time frame. So look at if you go to a 15-minute chart, right? And I look at this high. What do you think at 1 a.m. that high is a swing high right now, right?
Yeah.
It's a short-term swing high, but what do you think it's gonna look like on the 3-minute chart? At 1 a.m. 3-minute chart, right there, that's a long-term high. So you see, long-term highs are gonna be visible on more time frames, but on the 15-minute chart, this is a swing high. But if you go to the hourly chart at 1 a.m., this is a high of that candle. So you see how it's still important, because somewhere on some time frame it's a long-term high, but it's not going to be as impactful. So if you're thinking about if price is going somewhere on the higher time frame, if you're thinking about where we're going and you know where we're going to go, the draw, in other words, like where price is drawing to, then you have much easier time looking for trades. It's going to be so easy to find trades because you already know where price is going. So right now, I see that price came up to the long-term high over here. It took it out. Okay, this is huge because it's also last week's high, and we're a new week now. So this is a big level that we just hit. If we're gonna reverse, it would be around this area, and we did reverse. We changed the state of delivery. We closed all the way down here, beneath where the day opened. So we're definitely going down. Okay, that's for sure. But where are we going to? That's what you want to ask yourself. And it could just be that low. It could be this low too. But the lowest low would be down here. So this is the first thing I'm gonna mark. It doesn't have to get down there, but if it does get down here, I would expect it to not go much further. Then there's this low here I can pay attention to, because this is still there's still some significance to that low. It is still a long-term low, so I'm also going to look at that area. And then on different time frames, if there was a gap, maybe then I would look at it. Like for example, there was a gap right here. Price entered it and made a low, and then it went up from there. But yeah, going all I really need to do now is just wait. I'll wait to see if once we come down to this level, if I then see the change in the state of delivery, the two fair value gaps, the red and the blue one, and then I'll and that's it. It's very, very simple, not hard at all to trade, really, and it comes to the point where it just gets boring. It's just the same thing every day.
Okay.
I mean, the beginning is complicated and you probably don't understand too much, but the more you stick to it, the more you really start to go on your own chart and copy the same things. Better is. So, like, do you have a computer or laptop or anything?
Yeah, I do.
So next time, if we do this again, you should bring it. And if we're now reading, if we're going over price action, you should be on the exact same app that I'm on, and then if I draw something like buy side liquidity, then you should be doing the same thing on your chart.
Okay, for sure. Next time I'm gonna bring my laptop for sure.
Yeah, because then that's the only really way that you get better at recognizing it. Like when you said, oh, it's too much information and oh, it's hard to spot.
Yeah.
You know, the only way you're gonna be able to spot it is if you start looking for it on your own charts.
Okay.
Um, so yeah, what I used to do is the person that taught me would do videos, kind of like what I'm doing with you here,
Okay.
and I would be watching along on my own chart. I'd be listening to him in the background or on a different screen, and then I would go and look at what levels he's drawing, what he's doing on his chart, and I would draw it the exact same way as he did.
Okay, makes sense.
So that way, you get like a pattern recognition
Yeah,
in your head. Like
yeah,
you start to see it's easier if you actually go and take and draw out the gaps yourself. It will be easier to spot.
it makes sense.
So yeah, that's really it. Is there any you have any questions?
For now, I guess I'm good.
Yeah. Well, you don't have to stay if you want, but it'll just pretty much just kind of waiting for price to come down here. What I'm gonna do is I'm gonna set an alert. So then I just sit and wait. We can do some practice. This is what I do when I want to practice. Oh, well, okay, never mind. So now there might be a trade if I start to see on the 1 minute chart, the things I need to see. So where would you be able to tell me if, let's just say, you start to look for a trade? What's the first thing you need?
You need to spot the lowest low and the highest low. That's the first thing you need to do.
Yeah. Are you able to see it? The lowest low, you got it, but then the consecutive down close candles is highs. So boom, right here. Because those. So what you're really looking at is the down close candles. The amount of down close candles in a row for it to make that high. Now, because this up close candle, the green one here was very small, you could argue that you're going to use this range. Same thing with that one. You could argue you're going to use this. But basically you're looking for a clean run, a nice sharp run down that will take out the level you're interested in. For us, it's this level. So I'm going to put this to the right. We hit that level, and then so what I would need to see here is for price to close above this area. Do you spot another thing that we need? You spot something else? You hit the what's pink?
Sorry?
What's pink here?
Pink is for the gaps.
Yeah, the bearish fair value gap. But now we need two more things. We need price to close up above this range, and then we need I need a bullish fair value gap. Okay. Change the state of delivery. So it closed above the inverse fair value gap. Let's see if it's going to form a gap. I need to wait for that candle to close. There's 40 seconds left on that candle. If it comes down here and it paints this entire candle, it won't leave a gap.
Okay.
So right now there is a gap. There's a bullish gap there, the blue gap. So now I'm starting to draw my play. So I'm trying to get in as close as I can to this level. Stop would have to be minimum here, but this is a very, very wide stop. And then I could take profit at the relative equal highs. But I need 2 times what I'm risking minimum. And I'm not willing to hold it past these highs, because that's where price is, I think, going to gravitate to. And gravitating to that high would demand a whole lot more that I don't think I want to wait for. So, what? Oh, it didn't leave a gap. So we need to wait a little bit more. But in this case, I can either try and get an entry that's lower, or I can have a tighter stop. It's better to have a lower entry, but I think if I have a stop here, it's not bad. I can still do well with that. And it's above 2 times what I'm risking. So that little number there, the 2.17, if I were to bring this down to nothing, it would be 0.01. That's basically the amount I'm returning. So you see, if I were to risk nothing and then profit nothing, then there's sorry, no. You can't even see it in there. It's not big enough. There you go. You see how the number is 1?
Yeah.
That means I'm risking the same amount as I want to make. So I only take trades when they're 2 times.
2 times.
So I always aim for 2 times what I'm risking. So if I risk $100, I'll make $200.
Okay. Now I can spot the lowest term and the highest, so that's good. I can make the lines, the resistance line. Yeah. So now I just need to refocus on the gaps, to be honest.
Okay. Well, we already spotted the inverse gap, the bearish gap, the black gap here, right?
Yeah.
So, well, the only other gap we need is the green gaps, or the blue gaps, sorry. But the candles that form it is green, right? I color them blue. But we're just waiting for that to happen. We don't have any here yet.
Yeah.
So until that happens, and we also need to close above this area too. So that candle at 343, we need to close above it. What could happen is it might go back down again, might make a new low, and then go up. Then we would be using the range from wherever it made the high down to that low, that clean run of down close candles. And you see how this low, right? Do you see how it came down to it and then how quickly it went back up?
Yeah.
So it definitely filled some orders here. It might continue to go down, but this was this is why if let's say I'm selling from up here, right? And I'm targeting this low, this is why I would get out here. Because even though it could keep going down, the lows are where where you want to be getting out. Because that's what price is trading to. And it was gravitating to this low. It could be gravitating to the lower one there. So this is actually another thing too that makes it tricky. But if there's this is a long-term low, but if you go up to a 4-hour chart, this is just a regular low compared to that low. So because that low is more attractive, it's possible that we could continue going down to that one. But I mean, I don't think if you see the 3 things you need to take a trade, then take the trade. It doesn't matter what you think about the bias.
I'm just going to do this one often, then I'll get better on it. Also, please I'll also want you to send me the video. It doesn't be now. It can be later. The video that you post, so I can go to it. Yeah.
Yeah, I can send it to you. Do you have Discord?
Sorry?
Do you have Discord?
No, I don't. Wait, you post all your video on YouTube, right?
Yeah.
Maybe I can just look at your YouTube name, then.
No, but that one's private.
That one's private.
Yeah. It's okay. I'll send it to you. You should, yeah. Discord. That's where I keep all my trading stuff.
Yeah, I wanna see if I can download it.
Okay, hold on. So, look, what is that?
Sorry?
What's that here?
The gap?
Yeah, there's a bullish fair value gap. one's a bearish one. Now we just need to this candle 10 more seconds. It needs to close above this dashed line in order to have a change in the state of delivery. And then I can look to buy. So yeah, so now I'm gonna buy as it drops down into this level that I want. I can buy anywhere here. I haven't actually figured out what I'm gonna yeah, that's fine. Okay, I might now I might miss it. I put a limit, so I'm gonna get into the trade if it comes down and hits that blue line. It already hit it, but I didn't place it fast enough.
Okay.
So but it's possible it might just keep going up, and I might not get the trade. If it is, then that's just my fault. Dude,
yeah.
it looks like it might not come back.
I just need a week. After a week, I'm gonna get a little bit better. See, after a week of learning, I'll get a little bit better.
You wanna look more towards like 6 months of learning.
6 months?
Yeah, because you might be able to learn everything in a week, but there's some things you won't be able to learn. Like when it comes to charting, at least being able to spot gaps and liquidity, that's easy. You can learn that in a month, a week, whatever, right? But what I'm talking about is emotionally. Like for example, right now, you see how I'm not able to get in to where I want.
Yeah.
Price did touch the level as soon as it closed. It did go back down to where I want to get in, right? The change in the state delivery, but I didn't have that order set on time.
Okay.
So right now, if I was new to this, I'd probably be pissed off because look, this is $390 that I could make this morning before AJ even wakes up or even goes to sleep. Sorry. So that's 535 Canadian dollars. That's what some people make for a whole 2 weeks of work.
Yeah.
So I mean, like, it might piss me off that I missed this trade. If it continues to go up there without me and I miss out on this, like that might piss me off, you know. But I've been doing it for so long. I've made it. I've fucked up, you know. The I've been in situations like this so many times where in the past I used to get angry. I used to be here right now and be like, oh my god, okay, what if I just get in right now? What if I just click the buy button and I get in right up here, you know? So, oh, instead of down here. So now, but at least I'm in the position, and if it doesn't come back, I'll make money. And what happens is then I increase my stop. So if it does come back, I'm using the regular stop, and I'll add more when it comes back down. All these are just bad habits. Those are like, you don't want to do those things. You want to stick to your plan, stick to your rules, and sticking to your rules is harder than you might think. So that's why even though you might be able to guess where price is going, be the best technical analyst, I was really good at reading price and I was still losing lots of money. And that's because I wasn't able to, I didn't understand, you know, my triggers, what my weaknesses were, and I wasn't able to identify them. But now I'm looking at this trade, and for me at least, never been too much of a problem. As of recent this year, being in a trade for a long time, but before, I couldn't be in a trade for longer than 10 minutes. If I was in a trade for more than 10 minutes, I'd freak out. I'd close. I would, you know, take some of it off. I'd start to move my stop loss up, so I would lose less money if it comes back on me. But now I can, you know, yesterday I held a trade for, and Friday I held a trade for like 45 minutes each time, and it was nothing. I was able to distract myself and whatever, didn't think of it. Um, but you know, so okay, so we're already like halfway. I would already be up like $200 right now, $300, if I had just clicked buy here. And you heard me talking about how I want to buy it when it hits this level.
Yeah.
In fact, you know what I could have done? I could have just pressed the buy button when it came down here and hit this level. But I didn't do that because it's not my rules, right? It's not part of my rules. But you don't know when you get angry and when you get scared or anxious about what price is doing, you don't know emotionally how you're going to start to react. You might start to do things like buy at that level even though you shouldn't be. And it might work, and that's the thing is you're going to be worse off if in the beginning you try and trade with real money and you actually are successful and you make money. Because if you do that in the beginning, you'll never know how hard it is to lose. You're always gonna remember how easy it is to win, and it's gonna take a lot longer for you to learn your lesson, because you had that initial success.
Yeah.
Um, you do want to lose, but you want to be able to. You're going to lose in the beginning a lot. You're gonna get emotional and you're gonna make mistakes, but that's why you don't want to do it using too much money. So if you do use any real money at all, you really don't want to use too much, just enough so that you have your toes in the water. Yeah, and expect to lose it. Like have it money that you can afford to lose. You can also just trade fake money, but you know some people might not. It might not. You might not treat it as seriously as you would if you use this just a small account like with $500 in it. So, you know, keep that in mind, um, because you know I don't want you to expect that in like a month you can do this what I'm doing and you know consistently. Because already here, I already know that just the some people rewatch this video and they'll see how I wanted to get in right here when it was here, and because I wasn't fast enough, I know some people would have just clicked the buy button a bit higher. They would have been impulsive and they would have gotten in. And this wouldn't have been too bad, but if you would have gotten in like up here at a bad price, that would have been bad. Because it could always come back down. And this trade could fail. You know, you don't know. I don't want to get in now because if it fails, and I lose a lot more money than I planned, and it breaks my rules too. But yeah, now you just wait, really. It's just a big waiting game. I have like a stress ball at my other place. Just throw it against the wall.
Okay.
Or I just take a nap. Sometimes I might go text somebody on my phone. Yeah, I don't know, anything. This trading is just a lot of waiting. Yeah, you don't have to stay for the rest. I can let you know tomorrow morning if it works or not, or
For sure.
you can wait here and watch it with me if you want. Up to you.
I'm gonna let you do your thing, bro. Thank you for the one that you already gave me. Yeah.
You're welcome.
I really believe from there. I'll go and then get, take it serious and then learn more.
I'll let you know if it wins or not.
Alright.
Alright. Yep. See you.
Alright, bro. Here's what's going on.